Have you noticed the recent buzz in the stock market? A significant shift has occurred, leading to a rise in software stocks while chip stocks, particularly Nvidia, face a decline. Let's break this down for you. On Thursday, software companies like Salesforce and Workday showed a remarkable rally. Investors are shifting away from high-flying semiconductor names like Nvidia. Despite Nvidia's strong earnings report, its stock dropped over 4%. This unexpected turn indicates a potential software revival. In a significant market move, the software sector outperformed semiconductor stocks by 5.6 points in a single day. Analysts point out this is one of the largest shifts in trading flows we've seen recently. The iShares Expanded Tech Software Sector Fund saw impressive gains, marking the second largest gap over a decade. What does this mean? Investors have transitioned focus from AI chip stocks to beaten-down software names, indicating a possible unwinding of AI trades. Nvidia is typically the leader in this space, yet its performance hasn't spurred the expected momentum in chip stocks. Salesforce, for instance, announced a record $50 billion stock buyback authorization, boosting investor confidence. As hedge funds and long-term investors begin to enter the software market, it raises questions about the future positioning of chip stocks. However, not all software stocks are thriving. Zoom Communications saw a decline of over 13% following disappointing earnings. Similarly, Adobe's stock remains flat despite the overall rally in the software sector. In summary, the market dynamics are shifting. More investors are favoring software stocks, moving away from chip stocks like Nvidia. While some software companies benefit, others still struggle to regain traction. This pivotal change could shape investment strategies in the coming months. Stay informed about these market developments and consider how changes in stock trends could impact your investments. Subscribe for insights and updates on market shifts and opportunities ahead. The shift in investor sentiment reflects broader economic questions, especially as interest rates fluctuate and inflation concerns linger. As technology plays an increasing role in daily life, understanding these transitions becomes crucial for both casual investors and seasoned professionals alike. Would the software sector maintain its momentum? Only time will tell as we navigate this evolving landscape. As we delve deeper into this market shift, it's essential to recognize the implications for individual investors. The reallocation of assets from chip manufacturers means that traditional strategies might need reevaluation. This transition, while promising for some, also amplifies the risks associated with volatility in tech investments. Thus, remaining vigilant is critical as sectors fluctuate, impacting portfolio performance. Investors must consider not only the gains but also the potential losses that accompany such dramatic shifts in stock dynamics. As we examine these trends further, we will keep you updated on which strategies may yield the best outcomes in this climate of change. The growing interest in software stocks may compel investors to rethink their long-term outlooks. Hence, it's vital to analyze not only sector performance but also the underlying fundamentals of individual companies. For instance, while Salesforce's stock buyback initiative generates excitement, one must weigh it against the turbulent performance of other industry players like Zoom and Adobe. Each of these companies represents different facets of the software landscape, highlighting the complexity within this sector. Furthermore, as investors reassess their portfolios, they ought to consider the potential implications for future earnings and growth. Knowing how macroeconomic factors play into stock prices will help define investment strategies moving forward. Stay engaged and informed, as the nuances within the software and chip sectors will continue to unfold, shaping the dynamics of investment in the near future. Adaptability will be essential, ensuring preparedness for any unexpected market turns that could arise. Investors should remain proactive, staying ahead of trends to make the most of evolving opportunities. In this increasingly competitive environment, strategic decisions can lead to significant rewards or pitfalls. It's essential for investors to not only rely on market trends but also to perform due diligence on potential investments. This analysis involves scrutinizing earnings reports, market positions, and broader economic indicators. For example, while Salesforce stands out with its robust buyback program, other players must prove their resilience amid fluctuating demand and external pressures. Thus, a meticulous approach is necessary to navigate the complexities of the current market landscape effectively. In conclusion, the evolving dynamics in the stock market necessitate a careful examination of both software and semiconductor sectors. Adaptation to these shifts can empower investors to seize opportunities while mitigating risks, ultimately shaping the future of investment strategies. Stay informed and engaged as these changes continue to unfold.